Well, for more on those moves, let's bring in Chris Conway of the Australian Stock Report, who joins us in our Melbourne studio. Chris, great to see you there this morning. Thanks so much for joining us. Just wanted to get your thoughts, because obviously seeing no deal coming through from Doha, and I note that you were writing in your note there on Friday that you didn't believe any deal would come through. Of course, we know that Iran had decided not to participate. So do you think the meeting really was doomed from the beginning?
Good morning, Leanne. Yes, look, I certainly do think the meeting was doomed from the outset, and perhaps even before. So history, economics, politics, self-interest, all of these things stood in the way of there being any positive outcome or any agreement, I should say, at the meeting on the weekend. And here we are Monday morning, and of course no deal has been reached. So one could take the cynical approach and say that, look, OPEC wanted oil prices to rise, and by hanging the deal out there for the market to grab a hold of, which of course some people did, oil prices of course rose off those earlier year lows around $30 a barrel. So OPEC in essence had already achieved the goal that I think it set out to achieve. But yeah, in terms of the meeting being doomed from the start, Iran said before the talks even got underway that they weren't willing to discuss production cuts whatsoever. And then they, at the last minute, decided not to even send a delegate. So that really set the tenor of the meeting. One doesn't need to be a student of history and politics and economics to realise that Saudi Arabia and Iran don't particularly like each other. And once Iran had said we're not even going to send a delegate, it was never going to happen that Saudi Arabia was going to agree to any cuts. So we are where we are on Monday morning.
So what's the biggest fear now that we obviously have no agreement? Is it the fact that we may in fact see this production increasing? Because I know that prior to the meeting we heard some comments from Saudi Arabia saying that if no agreement is reached, then Saudi Arabia could actually increase their production and even double it in the longer term. So is that sort of the biggest fear at the moment with this no production deal?
Look, I think there's a lot of posturing going on, a lot of political posturing, as I've already alluded to. It's important to understand the context of the meeting on the weekend. The only agreement that was put on the table between all the nations that attended the meeting was that they would attempt to agree to cuts that would set levels at the January this year levels of production, which are already far exceeding the average daily demand for global oil. So they weren't going to do anything to change the structural oversupply in the oil market. It was really a piecemeal agreement that they were attempting to agree to, and of course, as we know, that they couldn't. So, like I said, I think it's a lot of political posturing. Saudi Arabia, do they have the capacity to double their output? Yeah, of course they do. I think they sit on something like $1 trillion barrels of oil reserves that they can flood the market with at any time. Of course, they don't want to do that because they'd be cutting off their nose to spite their face. They'd be, driving the oil prices down. But the other element to all of this is the fact that OPEC, in my humble opinion, again, this is a bit of a cynical view, but they have wanted to smash the US shale oil market. So they wanted to keep oil prices down. So if you buy the conspiracy theory argument or the argument that they were being underhanded, well, they never wanted this agreement in the first place. They want to make sure that those marginal producers, shale producers in the US, aren't able to bring their production to market and that they can maintain their market share. So, like I said, every element of this suggested that it was never going to happen. I think the key thing moving out of this is to understand, as I said, that they weren't going to be drastically reducing production. They were only going to peg it back to levels seen in January, which still outstripped demand. So we'll see the spike low. We've already seen it this morning in oil prices down 6 or 7% as I was walking to the studio. That might run for a couple of days, but then I think everyone is going to realise that this was sort of the outcome that we were always going to get, and hopefully oil prices steady into the back half of the week.
All right, so let's hope that it is just that knee-jerk reaction there. Just noting that the next scheduled OPEC meeting is on the 2nd of June. So I suppose between now and then, no doubt, a lot of these oil ministers are going to be trying to talk up some sort of agreement coming into that meeting. So I suppose between now and then, are we expecting a whole lot more volatility in oil markets?
Yeah, I would think so. You made a really good point on the show this morning, Leanne, when I was watching, that it really should be about, the supply and demand equation in the oil market. But that is being frustrated by the fact that, yes, coming into these meetings, oil ministers are coming out and saying, yeah, we'd like to do this and we'd like to do that, and we think there's a possibility that we could agree to something. But bottom line I don't think it's going to happen. So yes, there absolutely will continue to be volatility in the oil market. And to draw a parallel, it's, the commentary that goes on prior to a Fed meeting, it's very similar. You get all these opinions, you get all these people weighing in, and then, the Fed comes out and plays a straight bat. Well, this is OPEC's version of that. They come out, they play a straight bat, they don't agree to anything, the world keeps ticking, and then, yes, leading into the next meeting, it's all of our jobs to second guess and ramp and speculate and so on and so forth, and the prices will be extremely volatile.
All right, obviously we know we've been speaking about this correlation, Chris, between oil prices and equity markets for quite some time now. So no doubt with the oil price collapse, that's certainly going to have a sort of a lag-on effect or drag-on effect, I suppose, for equity markets, isn't it?
Yeah, most definitely. So again, oil prices are already down 6 or 7% this morning. I wouldn't be surprised to see the Australian market down anywhere in the order of 40 to 60 points. Just that as a best guess before the SPI futures come back online, obviously. And you're 100% right. We all know about the equity market, oil market correlation. It is particularly strong and has been that way since January. And it's a sentiment thing. As the sentiment comes off because of the spike lower in oil prices, it will drag on equities. But again, the hope is that people come to their senses, realise this was an outcome that was more likely than not, was pretty easy to see, and that we get some steadiness into the back half of this week. The first couple of sessions of this week could be terrible because obviously we'll get the Asian reaction first thing this morning, Asian market reaction, and then we'll have US and European markets come online tonight. Undoubtedly they'll be sharply lower as well, and that'll flow through to our local session tomorrow. So hopefully by tomorrow night when European and US markets trade, hopefully that's where we see some steadiness. And it doesn't turn into a really bad rout.
All right, fantastic. Chris, really appreciate you joining us this morning. Thanks so much.
Thanks, Leanne.
Chris Conway joining us there from Australian Stock Report in Melbourne.